And welcome. This is Mary Ellen McGonagle with your Friday afternoon weekly Edge show. Today, as usual, we're going to take a look at the broader markets. I'll also share with you what drove price action this past week. We saw a shift into a downtrend with these broader markets, and then also viewer question of the week. And that question this week is all about areas that are withstanding the downward pressure shaping up elsewhere in the markets. And I will share one bright spot as well as a few stocks and why. So let's go ahead and get started with some of those news items that drove the markets last week. First up, we did see on Wednesday, private sector jobs jumped and the markets responded with a downtrend. Now, we did see news later in the week relative to employment, and that is the July employment numbers from the U.S. government, and it did show that less jobs than expected were added. However, hourly wages remained high, which is not what the Federal Reserve wants to see. So at the end of the day, a mixed jobs report. And I'll also share with you how the markets responded to each of these reports. And at the end of the day, we are, as mentioned, now in a downtrend. We also did get news Tuesday after the close. Fitch is a rating agency, and they lowered the rating on the U.S. for their credit. Now, this was also viewed as a driver for the price action on Wednesday, where we saw that sharp pullback. And then, of course, earnings always being a driver during this current period, as the biggest movers to the up or the downside were those that reported numbers. We did see Treasury yields hit a high for the year. They pulled back from that high, but certainly notable. We'll take a look at the yield on that 10-year. And most notable is the fact that volatility spiked this week. And I'll share with you the impact on the markets normally when that takes shape. So let's take a look. Where did the markets close for the week? And here we are with a daily view of the S&P 500. And a couple of items of note here. First up is the fact that your momentum has now shifted into negative territory with the negative RSI and stochastics. We did close the week below this key 21-day moving average, and your next area of support is now this red line, and that is your 50-day simple moving average, currently at 4406. This does in fact put the S&P 500 into a near-term downtrend. As it relates to upside price action, that first area of resistance will be this high that was reached the week before last at that 4600 level. So from here, I do want to share with you a view of the equal weighted S&P 500. This is an index that does not give such a heavy weighting on those mega cap FANG stocks. Many of those names were down a lot more than the broader markets last week. And with this equal weighted view, you're getting a more broad look at what took shape in the markets. And indeed, we did see a pullback with this index as well. Negative RSI, negative stochastics, not what you want to see, because ideally we want a broadening out on the positive side. So of note again is that we did see selling beyond those big growth names into other areas. So let's take a look beneath the surface at some of the underlying 11 sectors in the S&P 500. This is a 2-month daily price chart view, and I've added an RSI indicator and sorted the sectors in descending order. So up here in the forefront are those sectors that are relatively outperforming. And I did mention in the beginning that I would share with you an area that is holding up well. We'll get more into this at the end, but that is the energy sector. It was up for the week, and we can see that it is remaining in a nice uptrend with positive momentum indicators. Taking a look at some of these other sectors, you also want to be very aware of areas that are coming under distribution and potentially reversing their uptrends. Materials, industrials still remain healthy, but as we move forward, I'll share with you some of these other areas. Healthcare down here in the lower quartile, pulling back quite a bit for the week with now negative RSI momentum and a close below that 21-day simple moving average. Also down here are real estate or REIT stocks, and utilities really fell out of bed, all about weak earnings and outlooks. But one area that is new to this lower quartile is technology. And here we are with XLK, and we can see that it is landed right here at this 50-day simple moving average. And for now, finding support. However, we do have negative RSI momentum, and we did see high volume on that selling. So the near-term outlook, not constructive for this high-growth technology area. One other high-growth area, consumer discretionary, we're very much heading south until a rally today that was led by Amazon, which came out with much stronger than anticipated earnings. The stock rallied 10% on the day on the news and really helped resuscitate this particular sector. From here, we're going to take a look beyond these sectors and take a look at some of these sub-industry groupings in the S&P 500. And here we are. First up, I did want to share with you the fact that these, again, are sorted by relative outperformance. And it's not on a one-week basis, it's a more subtle progression, but we certainly did see a notable move from this bottom quartile up to the forefront, and that is volatility. We saw volatility spike this week up to that 17 level, definitely concerning. Anywhere from that 16 to 18 for volatility can in fact foretell negative price action in the broader markets. So keeping an eye on this volatility index, also known as the fear index. Moving along, I did fail to mention this, but financials did fairly well. They outperformed, down less than 1% relative to the S&P, down 2.3%. And this is KRE, the regional banking ETF, holding in relatively well. These are companies that are certainly undervalued after having fallen quite a bit at the beginning stages of the banking crisis earlier this year. So there are some bright spots in there. Also moving along, we want to take a look. I mentioned energy did fare well. It was the only sector that was positive for the week, and it was up 1.4%. This is a daily price chart of Brent crude oil. And what you can see is that we are now at the 86 level per barrel, which is relatively quite high, and one of several reasons that is helping the energy sector stay afloat in an otherwise difficult market. Moving along, we can take a look at some of these other areas in technology, and semiconductors certainly come to mind. The group was down almost 4%, but take a look. We are still above key support here at this 21-day simple moving average, and the RSI is at that 50 level. Not constructive in the sense that I would jump in, but certainly notable primarily because it remains an area where there are select semiconductor stocks that are able to withstand downward pressure elsewhere simply because of the areas that they provide services and products for. And I did also want to share with you a quick view of the software ETF that I use, IGV. Most notable is the fact that it broke below this 21-day simple moving average, and we can see that that RSI is now in negative territory. This is an area that will get hit the hardest, certainly if interest rates were to continue to rise. But more importantly is much of this is earnings driven. We are seeing software security stocks continue to pull back in light of Microsoft's weaker than expected earnings report from their cloud computing division, and that's another area of software that is also under selling pressure. So from here, let's take another look at the energy sector, and I talked about it being the only group this week that ended in the green, and you can see that it's finding support at this upward trending 10-day simple moving average. And a lot of this has to do certainly with that price of oil, but also these companies that are in this sector are, for the most part, reporting earnings ahead of estimates. And I'm going to share with you a couple of names that are in that category. And first up is PXD. This is Pioneer Natural Resources. a producer of energy, and you can see the stock in a nice uptrend. They reported earnings ahead of estimates, and it's all about above estimated output of oil from their shale fields. So that's one theme that is working in energy. Diamondback is another stock that also is seeing increased output in their shale space. Very nice uptrend. The company also already came out and reported their earnings. So that's what you want to be on the lookout for, the fact that they did report earnings and that they have positive growth propellants. Here we are with Occidental, another company in that same space, just now entering an uptrend after closing above this 200-day simple moving average. One factor that each of these companies cited as the reason that their output has increased is due to improved technology, and that will lead you to other areas in energy that are producing these technologies, among them Halliburton and SLB, both in that space that provides and offers these services to these oil producers. That's it for this week. Have a fantastic weekend. Look forward to seeing you here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.